Hi there, this is Tim Reid, founder of the Phoenix Group and a licensed realtor here in Calgary. Now, I'm always reading and looking at articles on real estate in the Canadian market, and most of those articles are really good and say really informative things and giving stats about this and that and the other thing, always keeping track of what's going on in other markets as I'm talking to my partners in other parts of Canada as well. But today, I have to go out there and make this video. Got inspired to write a little blog article as well as talk about this on video is because they said something which is absolutely crazy malarkey. And this is what it is. I'm really surprised that this is a relatively well-known publication that I get their emails often, and really surprised they would say something this crazy, that it's even generally focused on investors, that they were saying that in Canada, that investors are competing with home buyers, retail home buyers, to purchase properties and driving the prices up because the interest rates are low. Now, I'm not saying there isn't a lot more buying going on with investors because interest rates are lower. However, I've been doing this over 11 years in the real estate game and know people have been doing this investment of real estate business for much longer than I've even been alive in some cases. And never, not once, have I ever seen an investor compete with a retail home buyer and pay more than they were willing to pay to get a property. Now, I have seen auctions in the US where they're bidding on properties and they get excited and they put their bid card up. And that also shows me, even at the auction, if they pay too much, they're not really paying attention to the investment. They're paying attention to their emotions. And they are two very different things. If you're going to be in this business of real estate investing to actually make money, you have to pay below market value, or at least market value, not let something get bid up and pay more than something is worth. That Warren Buffett says, buy low, sell high, and have a long holding period. That's also very good advice for most real estate transactions as well, that it can be very forgiving over time, that you can't pay too much for something. I don't care what the asset is. You can't pay retail for something, expect to resell it. Even when forcing appreciation, that makes the deal much riskier. So I've never seen it happen. A rental property, rent to own, flipping a house. I've never seen any precedent where an investor has outbid someone willing to live in that property to call it their home, because that person's always willing to pay more than the investor will, because investors go based on math, not based on emotion. And that's a fact. That's just how that works. And if you want to know a little bit more about how you can get properties under market value, even in a hot market, wherever that might be, we've got some strategies and ability to show people how to get that done, because we're doing that in our market, even after it picked up, and in other markets across the country. Even like places like Windsor, for example, they've seen almost a 40% increase in pricing from one year to the next. So if the property price is increasing like that, how do you find a deal? We can show you how. So go to the website, phoenixrealestateinvesting.com, click book a discovery call. Would love to chat with you, or click the link below in this video. Look forward to seeing you next time. My name is Tim Reid. Respect the hustle, everybody.